Alright traders, I'm back again with another video, and this time we're going to be talking about counter trend trade with Ichimoku. We're going to do a counter trend trade. I'm going to show you the opportunity that's arising, and it may not develop, but if it does, I'm going to show you what to look for and where this trade is going to happen. Okay, so first of all, we're on the daily time frame with the pound yen. Alright, so the immediate the long-term trend is up, so it's a bullish market. Everything's bullish here, so we should be looking for long trades on the 4-hour time frame, but we're going to look for a short trade on a pullback. All right, so the market moved up and we're looking for it to pull back. So there's a couple things we know and want to look at. So it looks like we're already into the pullback phase, maybe. So we're going to put the Fibonacci retracement levels here, and you could see these levels. So if the market pulls back, there's a couple places that it could pull back. Now the one area is going to be this Kijun-sen right here. So what I'm going to do is make this line, show you this line. We're going to put a line there. That's where the daily Kijun-sen is. We want to know that level. And we'll go there. And also that level is lining up with this support level right here. So the market could retrace down to this support level. Now this is a fractal level right here and another fractal level here. So price went up, hit that level, came back down to the Kijun-sen, and then went back up and made a double top, hitting that level again. Couldn't break it, fell down, and then finally it broke it. So 2 attempts before it could break it on the third try. So this is a pretty nice support level. And what price does a lot is usually comes down to support and resistance levels. So we broke this level. Now we may retrace and come back to that level. So that's where we're going to be looking for in our trade. Now the 50% retracement level is right here. So let's go to the 4-hour time frame. Everything on this chart is bullish, but you could see that the Kumo is widening. So the volatility in the market is expanding and getting bigger and more. There's not as much of a trend now. It's starting to slow down. So the market's becoming volatile. So let's go to the 4-hour time frame. Look at that. Okay, now here's where we're looking for our trade. Number one, we need to break through this cloud. Then it'll be a Kumo breakout. Same rules as always. We got all the components of the Ichimoku system on here, and we're using the standard settings. We're not doing anything non-traditional. Everything is traditional. So what we're looking for is the breakout of the cloud, and actually we could just put an entry order if we wanted to right below this level, and then don't risk much. Maybe risk 20 pips and then take that break and then take it to here. Now we really want to wait for the candle to come and close and then get in the trade. If you're aggressive, you could put a stop entry order down here a little bit and then put your stop loss according to your money management, because count every trade as a losing trade, and then you'll be okay. You'll know that you don't want to lose that much, so you put it where you think you can lose. But now the normal level, the most obvious level for the stop loss would be right here. This is a support level. Alright, so price came down, broke that level. It's trying to get through the cloud. So then this would be your stop loss level. Alright, now you have to determine if that's too far for you. If it is, you can't get into the trade if it's too far of a stop loss based on your money management. Now we want to see price breakthrough here. We got a flat Kijun-sen, which means nothing's been happening on the medium term momentum, but you could see now it's starting to move downwards, and Tenkan-sen and Kijun-sen are pointing downwards, and they crossed. So you got to cross inside the cloud. It's a medium strength signal, and you got the Chikou span below price. Now Chikou span is facing some resistance here with this cloud, so this may hinder the trade, but our rules were below price. We got a TK crossover, and our Kumo future is bearish. Once price gets outside of here, everything will be bearish, and we just have to get through this cloud. But we can still take the trade, but once we break through the cloud, it'll be clear selling. Now if you risk 25 pips, here's what you can make: 153 pips. Alright, so that's a big profit right there. If we shoot for that target right there, that's the daily Kijun-sen, and so that's going to be 6-to-1 profit right there. But here's the daily Kijun-sen, and then if we even went farther, here's the 50% retracement of the prior move on the daily time frame. So price can come down this far and maybe this far. So if we get that breakout, that's where we go. Now if we don't get the breakout, we don't take this Kumo break up to the upside either, because there's all this up here. We want to get above that support level, that resistance level there. So that's a counter trend trade, and you can keep your stop loss very tight. You can actually move it above this red line here, because you see that resistance and support level. If you move it up there a little bit above that, then price may bounce off the bottom here, maybe come up to that level and then take off. Hopefully it just goes and next candle closes below this level and we can take that trade. But that's a pretty good profit for what you're risking. So your risk to reward ratio is very, very good. Alright, so that's a counter trend trade. That's how you find the counter trend trades on a long move. And then when the market's supposedly retracing, you put your Fibonacci levels in and you retrace to those levels. But the more immediate level was the daily Kijun-sen. So that's where we're shooting for, that daily Kijun-sen, because that's going to be the support level on the daily time frame before the 50% retracement level. Let's look at that real quick. There it is right there, before the 50% retracement level. Now what price does, come here and then maybe you get a wick that comes way down here, maybe not that far, but sometime you get these long wicks and then price closes on this level. But that's our counter trend trade with the pound yen, and I'm on the 4-hour time frame. This works for any time frame. You can go to the hour time frame and see if you can find a trade on there. But traders, that's it. Counter trend trade. We'll see how it works out. Until next time, God bless.